Hello, everyone. Wanted to make a short podcast here that kind of deals with, well, a situation that comes up a lot and it seems to give a lot of students a problem. And I think it's just you almost need to see it together in a kind of a chart to be able to see how it works. So what we have here is one household. As an example, we have Tom and Judy that are married. They're both 50 years old, and they live in a home. And they also have Judy's mom living with them. Her name is Ethel. She's 78. And they have Ryan, who's Tom and Judy's youngest son. He's 19. Okay, so uh, we have four people living in the same household. Now, what's critical that you understand is there's going to be one tax return for Tom and Judy. They can file together because they can file jointly. So otherwise, there would be four tax returns. Each person is a tax return. But because Tom and Judy file jointly, they can file together. So that's one tax return, a second tax return for Ethel, and a third tax return for Ryan. Now we'll look at each one of them and see if they actually have to file, but the assumption is that each one will be separate. So Tom and Judy married filing jointly, so their standard deduction is $24,000. That's the basic standard deduction. They're both under 65. Neither one of them is blind. So the fact that Ethel's living with them has no effect on the standard deduction. They get no benefit from here being over 65 as far as the standard deduction is concerned. Ethel, on the other hand, has her own standard deduction. Now, this is whether or not they can claim her as a dependent. So if we go to the rules about, remember there's a qualifying child, a qualifying relative, and even a non-relative that lived with you all year. Ethel is clearly a relative, and the situation is if she fits the other criteria. Now, as a relative, she can't make more than $41.50, which she does not. So she doesn't have too much income. They provide, if we make the assumption they provide more than half of her support, then they can claim, Tom and Judy can claim Ethel as a dependent. Now, that means that some tax credits may be available for Ethel, but it means there's no additional deduction for Ethel for Tom and Judy. All right, but it does change the idea that Ethel, of her standard deduction, remember, Ethel's standard deduction is either 1,050 plus the extra for being over 65, or her earned income plus 350. So we'd have to look at this income and decide if it's earned. Well, chances are at 78, she's not earning a lot of income, so we'll assume that that is unearned income, like interest or something on her savings that she has from her earlier life. So her standard deduction would be the 1,050 plus, since she's single, 1,600 for being over 65, assuming that she's not blind. That would be her standard deduction. So her standard deduction would apply against her income. All right. So that is how those are separated. So it affects Tom and Judy because they have the possibility of an exemption with regard to tax credits, but she still has her own income, and her income is reported on her return separate from Tom and Judy's income on their return. Now, Ryan is the same similar situation. Now, if we look at this and we'll say that all of his income came from a summer job, he is a full-time student. So he qualifies as a qualifying child of Tom and Judy because he does not provide more than half his report. He's living at home, going to school full time, made $6,000. There is no limit to how much income he can make as a qualifying child, as he fits the other criteria. There is no income limit. He's not filing jointly with his spouse or anything like that. So he is a dependent of Tom and Judy as well. So his standard deduction is the greater of $1,050 or his earned income plus $350. So his earned income is $6,000 because it was all a summer job plus $350. So his standard deduction would be $6,350. So Ryan affects Tom and Judy in the sense that they can take the dependency exemption, which will entitle them to some tax credits for his tuition and things like that at school. And that affects what he can claim as a standard deduction, although in this case it was plenty to get him to wipe out his income. All right, so that's how they work together. Even though they affect one another, there are three different returns, and the income is reported to the person who actually earned it on their return. How they determine what the standard deduction is depends on their filing status. Ryan and Ethel being single, okay, Tom and Judy being married filing jointly. And then if you are a dependent of someone else or not. And when you are, then you have limits on that standard deduction. If you are not, then you get the full regular standard deduction, plus any additional for age or blindness, which is not affected by the other people. It's only the taxpayer and their spouse that could be affected. If they were blind or over 65, that would increase the standard deduction. So Ethel's being over 65 affected her standard deduction, but it had no effect on Tom and Judy's. So that's kind of how they work together and yet are separate the same way. Now, if we look at this a little more carefully, Ryan does not have to file a tax return. Now, he may want to if he had money withheld from his check during the year to get it back, but he does not have to file because he is not over the amount of the standard deduction. So he would not have to file, but Ethel would need to file her return because she is over the standard deduction. So that's how that threshold works as well. So Ryan could choose not to file. Now that's for federal, and we're not dealing with state, and the state filing, at least in Pennsylvania, is much lower than the federal. So be aware of that, just if you happen to ask the question. But you could advise Ryan that if he has no federal withholding, he does not have to file a federal tax return for this year that he's considering right here.